Good morning, Zero DT team, and happy news-filled Wednesday. It's a news-filled week, as you all know, uh, and that's probably why we're seeing the amount of chop that's going on. I'm going to start these videos from now on with a intro face-to-face. I feel like that's more personable, and I'm sorry that I have to plague you with my ugly mug, but that's how we're going to do things from now on. Um, so just to outline what we're going to look at today, I'm really focused on lower time frames. I think what's going on in the 30-minute chart relative to really the past 2 weeks, even just this week, is going to really tell the tale from a longer term perspective as price finally resolves and decides where it wants to go. So the things I'm going to focus on is 5 things today. There's a normal variation TPO that I'm looking at over several days worth of action. I'm going to explain exactly what that means and why I think it's important. I just want to highlight real quick here. Yesterday was the best relative volume day since September 25th. So there appears to be longer term participants coming back into the market. And again, I'm going to talk about why I think that's important relative to that TPO. Finally, I'm going to talk about the breakout risk today and explain how I'm trading my engagement zones due to what I see as a higher risk to the upside, and then finally, I have more dynamic beta weighted deltas today than normal, and I'm going to tell you why I'm doing that. So I'm going to share this chart. Like I said, I'm just going to focus on the two shorter time frame charts that we look at. So what's going on here? So first things first, we're accumulating here in this island value area from the low. So when we made that low, we put in this value area here, and it makes sense that we're accumulating just kind of relative to that because obviously that's a year's lows. You have people trying to buy the dip. You have people expecting continuation. So you have a lot of action going on here. So what I'm really looking at, I'm looking at this TPO. So if you look at that TPO, it represents what I think are the two most important levels, which is one, you can see the very top of the value there kind of corresponds with this poor high that we put in during this session. So I'm going to go ahead and merge that now. Okay, so you can see that high is, I think, is pretty darn important. And then the high up here is going to be where I see that breakout risk I'm talking about. So intraday, we have a bit of a narrow IB relative to what we're normally seeing. It's about 30 to 35 points today. So just real quick, you'll see in the routine warm-up document there, I say that extensions at double range of IBR if LT traders pounce. And what that means is I'm seeing a lot of short-term trading action going on here. And that if the big boys do eventually come in, be it to the upside or the downside, I'm seeing an extension of about 60-ish points one way or another from the IB low or IB high. That's all that means, so I just wanted to cover that real quick. So for me, what's going on intraday is we have a really important pivot near the high of day. So near that poor low, so if I just undo that merge real quick, near this, at this poor high rather, not poor low, at this poor high, you have a structural pivot, which is during the Euro session, basically the most important activity occurred right at that high. And right now, obviously, those traders are on the wrong side of the action, which is why we're kind of seeing, I think, gravity take place here so far in the tape. But if they do get back on sides, I think we're going to kind of look for that continuation up toward that 60 area on SPX. But there's some things standing in the way, and I think, which is why you'll see in that short engagement zone today, I have my first zone is from 36.10 to 36.25. Again, this will be near where that pivot is, and I think we can fade that first move toward it. But if we kind of get above that, I think we're going to have at least 10 points of continuation and moving up toward another zone, which is from yesterday, where we had that in the open drive was structured such that about 35 to 55 in SPX should be, well, in ES, but it corresponds to SPX, as you know, should be a supply zone. So going to be looking for a potential additional short there. But when I'm talking about the breakout risk, remember, we have a breakout box today that encompasses the tape up through where that pivot is. And so as long as we're in the box, we can expect to consolidate. But if they really push above, there should be some fuel beneath the buyers to bring them higher. So we got to trade it. We got to trade the supply zones. That's just kind of mechanical. But don't be surprised if you start to see an extended move. And really, I'm going to be watching that 60 area. So again, just looking at the TPO, we don't got to complicate it. If we make a higher high relative to yesterday first, and then relative to a few days ago, that's when I think we got to start looking for a move up toward this 3,700 area here. So obviously we will look for the false break first within here, but I think we might see a quick move up toward that 3,700 area because that is the prior month value area low. So that's a breakout risk. The way I'm going to play it is I will fade the first move toward that 3610 to 3625 area in SPX. But if we start to break above that pivot I'm talking about, which is at about 35 in ES, so 25 in SPX, I'm going to put on a tranche of that true break trade just in case. I'm going to keep my delta short, obviously, and I will add to those short deltas that 35 to 55 zone, but I'm not going to mess around if we start to build time and volume above that. So that's what I'm talking about in terms of the breakout risk. As I read my engagement zones here, let me just make sure everything's clear. Yep, so that's what that means on the routine warm up there. So yeah, so that's why I say the TPO is most important. Everything just kind of revolves around, to me, the first zone 3610 to 3625 in SPX and 3635 to 3655 in SPX as well. I think if we get above those, you get that break, it might be sustained, especially with the rest of the news this week. You got plenty of catalysts to push it one way or another. And on the downside is a little more simpler. It's a little simpler. First, we're going to look for that false break. So the macro trend line is at about, let's say, 50 to 60 on SPX. So if they do make a new low, they push it down, I'm going to look to play that false break if they give it to us. Obviously, they may continue it lower. But for me, I'm not really looking for that true break today on the downside. I may miss a trade if it occurs, but I'm going to, I'm going to buy the dip for now. Unless if you look at this little chart here, VIX, this is a new contract, by the way, for anybody following. This is the X22 contract. I'm going to be buying the dip unless VIX starts to hold a higher high here. So I'll just draw a little line like that. If VIX starts to build time and volume above this level, VIX futures, I'm going to be wary about that false break, and I will play the true break if we get the devised signal, just because, again, got to stay mechanical. But you can see VIX is still kind of consolidating. It's an upward consolidation. We're well above the breakout, which I identified as down at about 31 here. So I think above here, we're kind of still in that breakout posture, and it's worth watching that. So as we start to break that, that's going to be a sign of a potential bullish move. But as long as we're consolidating in this manner, I think we're going to kind of stay lower, and I will be selling those rips. So that is my plan relative to the tape. And if we look at the portfolio, drag this over here. So what I got going on here? You can see the pictures in the newsletter just to kind of check out the risk graphs. I'm going to maintain the short delta as long as VIX stays in this upward consolidation trend. It starts to break, I'll start to neutralize, but I'm really not trying to get fancy. This stuff is all long term. My SPY position is 37 days out. The ES position is, ES position expires on Friday, and I will obviously carry that over. But yeah, this is just my long-term positioning is going to, as always, follow what's going on in the VIX. But it will be super dynamic today. When we start to pop one way or another, I'll be quick to neutralize, and I'm not going to get caught in that squeeze because this 30 level. So if we let's just undo all these merges real quick. That same 30-ish level has been tested time and time again, and it just keeps getting rejected and rejected. So once we do start build time and volume, again, like I said earlier, I'll fade it the first time, but I'll be real quick to throw that long hedge on. And as we go higher and higher, and then finally when we build time and volume above that 60 area in SPX, that's when I'm going to switch those deltas long. So yeah, So that's what I'm looking at today. It's going to be complex trading. We want to stay limber, and I think we want to stay pretty mechanical, and not try any hero stuff today. So that's all I got for you, and I'll talk to you tomorrow.